I think it's ironic that we control the House, the Senate, the Supreme Court, and the White House, and we're yelling election fraud. I mean, we won all the damn elections, and we're in charge, and what are we doing with it? We're bankrupting the country, we're starting new wars, we're violating the Constitution, we're not cracking down on the fraud. The problem is not the elections. We won the damn elections. The problem is we're wasting our opportunity that the voters gave us. And the Republicans are going to pay for that in November. It'll be an absolute shellacking if they don't wake up.
New satellite photos showing concerning and familiar images from China. Officials say Beijing is constructing ships and planes nearly identical to those used by the U.S. military. Chief National Security Correspondent Jennifer Griffin tells us how the replicas are being used.
This is a 510-foot 3D replica of an Arleigh Burke-class U.S. Navy destroyer built in the middle of the Taklamakan Desert in China's Xinjiang province. Vantor, an American satellite company, tracked the construction over the past 6 months. The model could be used for potential targeting. It has an exact replica of the helicopter launch system, mast, bridge, and deck guns used on this particular American warship.
We've had targets that clearly look like aircraft carriers, but this one is really just super detailed, which makes me wonder why.
Thomas Schugert, a former Navy submarine commander, said it's not the first time that China has made a replica of U.S. warships or fighter aircraft. In 2021, the People's Liberation Army built a mock U.S. aircraft carrier for what the U.S. military thought was for target practice. Now the Chinese may use the replica to train AI to recognize the shape of an American destroyer.
Maybe they have a weapon system where it's a drone or a missile.
They tried to kill me. Wallstreet tried to bury me.
Ships, they want it to be able
God
to
had another plan.
the right ship. The one they really wanted to get.
Others think these replicas were designed to be seen by satellite for strategic measures.
Hey guys, Carlos Cortez here with another episode of Scriptures on Wall Street. I hope you are doing well. If you're just listening to this podcast for the first time, please reach out and go to Rumble, YouTube, Spotify, or Apple Podcasts, and click and like, subscribe. Our channel is Scriptures in Wall Street. I would love for you to help monetize this channel. We've been doing this for over 6 years now, and very, very proud to be here and just talk about faith, family, and finance, and a lot of the struggles that we see moving forward as this generation continues to retire. Speaking of generations, don't know if you know this, but when I was in college back in 2004, I graduated in 2006. There was a staggering statistic. It's why one of the reasons why I had security going into job security and finding a career. I studied the baby boomers. So if we look back into baby boomers, following the baby boomers, I just knew, and I verified with multiple professors, international contract law professors, marketing professors, business admin professors, just in business school in general. I just had this belief, and I was collecting evidence to support my new belief system when I was 16, 17, 18 years old. If you catered to the baby boomers, you will have a successful business. And so in 1930, we had the Gerber, right? We had Gerbers. The baby boomers were born. We had Gerber that came out later on in, I believe it was the 40s or 50s, when the baby boomers were actually getting old and buying homes. Remax came out. And then after that, we had, as they got their home, they wanted to feel a little younger. So the Ford Mustang came out. They wanted a sports car that made them feel young again. So the Ford Mustang came out late 60s. And what do you know? We've had a massive amount of baby boomers buy the Mustangs, a classic American car. I even own a Mustang 99 Cobra. It's sitting in my parents' house collecting rust. But one day I'll trick it out, and I promise you, I'll restore the bad boy. I wanted to give it to Nathaniel, my oldest, and he doesn't know how to drive a stick, and I don't know where to find a manual anymore. But yeah, I mean, by the time he's 18, he's 13 now. By the time he's 18, all the cars will be self-driving. So he's going to get a pickup truck. I don't care what anyone says. He's going to get a pickup. I don't trust kids behind the wheel, and I want them to be safe. No need for a kid to have a sports car like I did, or you did, right? It was nothing came good from it other than risking your life every day and showing off for the girls. So speaking of the baby boomers, as the baby boomers got older and you fast forward to 2000, nutraceuticals came out. Pharmaceuticals became bigger than ever. You remember the commercials in early 2000s, the pharmaceutical, the Advils, the Bayers, the pain. Next thing you know, looking younger, feeling free was just kind of like plastic surgery was huge 20 years ago. It still is huge. But now we have nutraceuticals. And more importantly, retirement planning was huge back in 2000 because the staggering statistics showed that 10,000 baby boomers would retire for the next 30 years. That was what I learned in 2004. So when I graduated in 2006, I wanted to be a financial services professional, whatever that looked like. So I became a stockbroker. You know, old people like stocks. So I studied stocks and I studied how to solicit stocks, get licensed, and learn about everything about business. Stocks wasn't just about, the Googles, the FedEx, and the classic Microsofts, the value stocks that don't really have any growth upside. But this is how I got into technology. I was passionate about technology. I told you the story about how I met a financial advisor, had a Palm Pilot, and I was changing tires in high school. And I still love changing tires. But this is how I got into the business is I saw this gentleman. I was sweating. I was only 18 years old. It was after school and it was late summer in North Carolina. And I was just a grease monkey at the time. And I saw this guy come out, his Mercedes, beautiful Italian suit, white collar. I was rocking a blue dirty collar, as you know. And I saw him come out and he just looked sharp as nails. This joker busted out a beautiful Palm Trio. If you remember the Palm Trios, it was actually a Palm Pilot. The Trio came after the Palm Pilot, but the Trio was the mobile device of the Palm Pilot. So it was around 2000s and early 2000s. And I saw this phone and I asked him, sir, what is it that you do for a living that you get to have a Palm Pilot? And he just chuckled. He's like, oh, I'm a financial advisor. I see all my calendar and my client meetings and my notes. And I get to email correspondence to my staff on where I'm meeting them at. And I was just blown away. I was like, wow, what's a financial advisor? And then I figured it out. And here I am, obviously 28 years later. So I say that because the retirees are going to turn 65, 10,000. Back in 04, it was for the next 30 years. Now those 30 years are almost up in 2029. So that number doesn't drop off. It actually goes and hands off to the Generation X. Generation X is actually turning right after the baby boomers in 2029. They're turning 65. Generation X, check that out, is turning 65. And there will be about 9,500 Generation X in that demographic for the next, let's see here, for the next 15 years. So after 2009, for the next 15 years, you'll have Generation X turning that. And then it'll be the millennials. Oh my goodness, that's crazy. I'm a senior citizen millennial. I was born in 1983. That's why I have gray hairs. But I like to say I have the work ethic of a Generation X, but I'm younger like a millennial, even though I'm not a millennial. Thank God I'm not Gen Z. Holy smokes. Man, do they have some entitlement issues. You know, I was playing hockey the other day, and I said, you know what's wrong? There's this punk kid. He did like a Michigan, just like completely like, you know, why are you playing beer league with us 35-plus-year-olds, 40-year-olds? And you think you're cool because you skate faster and you can do all these Michigans and stick handle moves that are pointless in a game. So I just looked him in the eye, grabbed his face mask. I said, you know what's wrong with your generation? You guys are entitled. Everything is everyone else's fault. You guys never take responsibility. And then he had like some colorful 4-letter words right after that. He said, man, you're so gay. Your truck is gay. You're fat. You're this, you're that. I mean, he threw everything. Your mom's a whore. Your wife loves me more than you. Like everything that you could possibly do, like a little kid would say, right? And I just started chuckling. And he goes, yeah, you're broke and this and that. And I said, you want me to show you my 1099s? And he just like shut up, you know. He's like, I didn't know what a 1099 was. Whatever. I don't need to play that game. This is on the ice. All I said, you guys are entitled. I never take responsibility. And to think that they will retire one day, hopefully he'll have some life lessons that he'll learn, like I did, that, hey, we all have blind spots. We all have things we need to work on. And that's okay. You can say whatever you want. I'm 43 years old and I'm skating with these young kids. So I asked him, so why I'm on the same ice as you if you're this NHLer? And he kept quiet. It was hysterical. But I wanted to say, the reason why I say that, because people are turning 65 every single day. And there's so many blind spots in retirement, guys. So many. Holy cow. You don't go to school for retirement planning school. You don't go to school to learn this stuff. So you need a professional that can actually help you, guide you through all the nasty stuff in retirement. I'm talking about estate planning. I'm talking about growth. I'm talking about not losing money. I'm talking about being in alignment with your advisor. What if your advisor doesn't believe in the same faith you do, doesn't believe in the same methodologies that you do, doesn't have the same principles, doesn't have the same scruples as you, doesn't even read God's word? Like, how are you supposed to navigate your retirement? And here's the other thing. It's not about just making a rate of return. It's not about having a lifetime income. It's not about, is my money growing every single day? Or you didn't call me this week or last month. That's old hogwash stuff. What you need to understand is this stuff is more complicated than you think. And just doing the whole Dave Ramsey garbage of buy, invest the rest, or just buy a mutual fund and don't worry about it, set it, forget it, automate it. The only thing that he's good at is telling you to freeze your credit cards and getting out of debt. He's the man at that. Everything else is garbage because he's a red money wannabe advisor. He's not even a licensed financial advisor. Can't say the stuff that he says and be a financial advisor, a license, by the way. Meanwhile, let me say my disclosure here. Everything on this podcast is meant for information and education purposes only. I am a licensed financial advisor. However, this is not investment advice. Everything on this podcast is meant for information, education purposes only. If you would like to schedule a meeting, all you got to do is go to cortezwm.com or call us 813-448-3446. Now, with that being said, you have to be careful to navigate what is going on in this retirement era. For those of you that are retiring, if you're a part of the 10,000 that are retiring today, then do not fall victim to the 401k. Do not fall victim to, I made 27% last year and my green money fund only made 12 or 18 or 15 and my 401k made 30. Guys, let me tell you, you have so much to learn if you say those things. There's apples and apples and oranges and oranges. When we're dealing with red money is anything that has unlimited losses, unlimited gains. I'll repeat that. Red money is a bucket of money, anything that has unlimited losses, unlimited gains. There are some years that you will kick butt in red money. There's some years that are just massive. There's hedge funds in red money. There's mutual funds. Mutual funds are red money. You could buy a growth mutual fund and have the ability to outperform pretty much everything if you wanted to. However, the losses are detrimental. The losses will completely jack up your retirement. And so that's the whole thing is avoiding the pitfalls about your retirement. So when we have red money, people get so emotionally attached to the growth of this account. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. So we get caught up in the red money. We got the 401ks, we have stocks, we have bonds, we have the NVIDIAs, we have oil REITs, we have exploratory REITs. There's ads right now. If you go on Facebook and you type in high yield returns and Google it, you're going to get these ads of these guys that say accredited investors only. But what they don't tell you is that these funds aren't liquid. These funds, you may never, ever get back. This is why they want you to be accredited. Accredited means you got, $1.5 million, $1.25 million liquid, or you make over $300,000 a year. If you're married, $250,000 if you're single. The creditor investor rules change every single year. But when you are a creditor investor, you get access to different investments. The problem is that if there is a loss in value, if there is less lax rules, they could argue you're a credit investor. You can't sue us if the investment went down. So it's more not to the benefit of you, but it's more to the benefit of them, in my opinion, because you are deferring your right for liability because you're a creditor investor. And so obviously if there's fraud, you can still sue. There's rules that they can get away with, but I don't like accreditor investor only investments unless you can afford to take the risk. And that's the whole thing about accreditor investors, is that you can afford to lose money. Now, there are some good Reg D products. A Reg D product is red money, by the way, but it's also, these are like non-traded REITs, or basically real estate land, exploratory oil. There's also car washes, there's farms, there's a lot of things in Regulation D products. And they don't require to file a K1. They don't require to file a lot of the things the SEC requires. So be very careful as you are trying to seek maximum returns. If you want maximum returns, you're better off reaching out to us and let's have a scheduled call, and we can talk about some investments that are hedge fund based. I'm talking about if you're okay losing half your money to try to get anywhere from 50 to 150% a year, we can do that. It all is a risk. It's all a risk situation. How much are you comfortable taking risk? We do yellow money, but we have high yellow money risk portfolios. We just stay away from the red money. So the definition of red money, let me go back to that. The red money is unlimited losses, unlimited gains. You have no control in red money. It's typically passive. The Warren Buffett strategy, where you just buy and hold forever. Most people that have physical silver are in red money. I love these puppies. They're silver bars. I've never sold them yet. These are my prop ones, but I have sold. When I told you guys I sold back in April, I said, hey, now's a good time to take 10, 20% out so that when it crashes again, you can take that 10, 20% in cash that you have and rebuy silver at 48, 50. And that's a great time to buy silver. But it's not a great time to sell if you bought it last year over 50 and now you're getting your butt kicked because you got emotional. And that's what red money does. Red money, it creates this false sense of hope and this false sense of excitement, and your face gets pied. You get pied. You just like fall on your face and you say you shoulda, coulda, woulda. So don't let the shoulda, coulda, woulda be your problem. And the problem is that we have 10,000 people retiring every single day all the way to 2029. And after that, then the Generation X for the next 15 years, there's 9,500 of you guys retiring every single day for the next 15 years after the baby boomers retire. So Learn from the 01s and the 08s. Imagine being 65 years old and 2000 was around and you were like, oh man, bringing in the new millennium and we're going to retire on 2001 and boom, .com and .bomb happened. You're 65 years old. You had $1 million and now you got 600,000. How on earth are you going to live off 4 or 5, 6% of your nest egg when you had all your money in the 401k and you thought it was going to be safe? That's the difference between red money and green money. In red money, there is no downside protection. There's only the sexy allure of what your money could be. So let's get rid of that false identity because your identity is not in your bank account. First and foremost, God has you in the palm of his hand, but we also need to be smart. Ecclesiastes, it says, do not invest in 7 things. Invest in 8 things because we don't know what the future holds. And as a man, as a provider, we have to understand that life hits us in so many different ways we can't even predict. So in Ecclesiastes, it does say to invest in 7, not just 7, but 8 things. So having green money could be one of those 8. Having yellow money could be one of those 8. Having precious metals could be one of those 8. But for you to take your whole retirement and put it in precious metals, guys, you are going to get raked over the coals. You will lose money, especially with these commission breath brokers that violently and predatorily charge you a spread that is ungodly, that is unethical, but it's legal because they're not licensed. They're just complete salesmen. And they don't have a pulse. They're cold. So do not do business with these people, guys. Do business with people that are licensed, that actually get paid when you grow, that are there with you throughout the whole retirement process, that understands the laws of retirement, the Secure Act, the FDIC rules, how the dollar works, how the businesses work, how your situation works, and that can put it in a financial plan for you, that can actually grow and do simulations, that can do projections to give you a better roadmap for your retirement. Guys, just putting money in red money and saying, I'm good, I've done it, great. How did that work out with your bond portfolio? Because you thought the stock market was going to go down in 2022 to 2023, interest rates skyrocketed, and 24 has skyrocketed. And here we are. Interest rates are trying to go down, but they're not going down fast enough. I even lost money in TMF. You guys remember that? I said, this is going to be the best trade of the year. Well, guess what? They never lowered interest rates. They started lowering interest rates a year later, and it was terrible. But now they're lowering interest rates, and they think they're going to lower interest rates, but that was a year ago. And we had 3 rate drops, quarter-based rate drops, nothing knee-jerk, because the Fed doesn't even know what they're doing. They're late to the game. But as we go into 2026, the last 2 quarters of 2026, I told you guys we'll see more foreclosures. We'll see jobs not keeping up with inflation. The labor market will get weakened. Commercial real estate will be a big issue. But on top of that, there's also, with commercial real estate, there's also private equity that has invested in commercial real estate. The banks have made a killing at high interest rates. And when they get lowered, they don't have those interest rates working in their favor. And so their reserves get questioned. You'll see bank failures, maybe a few of them pluck off. And so when you put money in the bank, what you do have to understand is that you forfeited those assets. You are relying on the bank for them to be solvent so that you can withdraw. You've lost your money to the bank because you no longer own it. You don't own the money in your checking account. Yes, that is 100% legal on their end. So how dare you go there and ask for all your money out when you don't even own it? Just because you deposited the money in the bank does not mean you own it. Welcome to America. Welcome to FDIC insurance. You no longer own it. Let's do something smarter, guys. Let's get accounts that we actually own. Okay? And let's not bicker about I only made 12%, only made 11%. The stock market was up 25%. You have to have an account that you actually control, you own it, CBDC proof, also financial resetted insurance and proof. You have a contractual agreement. You have the ability to take money out up to 10%. And your money's not invested in the stock market or some FDIC garbage where you have to make an appointment just to ask permission to take your money out on a future date. This is a reality we live in. So you don't own the money. So instead of asking what my rate of return is, you should be asking the return of my money instead of return on my money. That's going to be the important question going forward as foreclosures hit the market. And don't believe me, go to the Bro Investors websites. We're starting to see it right now. Boom. Front page of the Bro Investor, finance.yahoo.com. Foreclosures hit the highest level since 2019. Interest from bargain hunters. After years of near record lows, foreclosures are on the rise again. Some home buyers can mean a rare opportunity to enter a market at lower prices. The median foreclosed home sells 27% below typical market value. And at this time, home prices are hovering near all-time highs. Such deals can look appealing, experts at Yahoo Finance say, especially to buyers with experience navigating complexities of home buying process and a willingness to do renovations. There are a lot of risk and a lot of complication with buying these things. So it's not for everyone. It's a larger share of the market. Yeah, so we're starting to see more and more foreclosures. In the first half of 2026, almost 250,000, 228 homes in the U.S. had foreclosure filing, like a default notice, scheduled auction, or bank repossession, up to 21% from last year and the highest since 2019. Homes owned listed for sale by a lender made up 1.3 of all listings in April, according to Realtor.com. So the rising cost of homeownership is what they're blaming on. However, the foreclosure rates are still far below levels reached during the 2008 subprime crisis. And it can take a long time, sometimes even years, before a home that enters foreclosure proceedings is actually sold. Going on, but we're starting to see home prices just plummet. And there's other articles on this Bro Investor site. Pending home sales fall more than expected amid high mortgage rates. We saw this coming. A growing number of homeowners are avoiding foreclosure with one little known option. And there's just more and more foreclosures on the rise. People just can't afford it. And who knows who had an adjustable rate mortgage on their property. Oh, and by the way, we could be experiencing a interest rate rise. For those of you that are waiting for mortgage rates to drop, I wouldn't hold your breath because interest rates could go up. So we've gotten a lot of questions. Carlos, should I pay off my home? My mortgage is 2.65. I'm like, no, that's like free money right now. There's no way you get mortgages that cheap right now. Even with a gazillion plus credit score, you're not getting any type of mortgages like that. So put your money in a yellow money account, even a green money account, make 5 to 12%, conservatively speaking, take that interest and pay for your mortgage. And at the end of your 10, 15 years, you have two assets. You have the home, as well as you have your green money account that fed your income, that fed that bill. There's so many things that we can do with green money because it's safe. You don't lose anything. You have the ability to compound. Like Albert Einstein said, the greatest eighth world wonder in the world is compounding interest. And so you got to have the Albert Einstein lifestyle, is getting compounding interest working for you every single year. Speaking of which, I have this cool graphic. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. Here's what I wanted to show you. We have the growth index versus the S&P 500. This is a classic green money account. Of course, just so you know, this is just back tested past performance, not indicative of future results. As you know, we're using this is a generated PDF that I just made. So this is just taking a hypothetical situation. You had 10 grand back in 2010, and you just put it in SPY, the S&P 500. Your account balance would be at 36,694 with the growth index of a green money account. Again, no fees and no risk. Also, this is the index. Whenever the market does go down, remember in this account, you lose nothing. So it did bad in 2021. It lost about -18. I think that was the worst drawdown. Negative in 2021, it was roughly -11.5. So in that -11.5, you didn't lose anything. The insurance company catered it, put a floor on your previous gains, and you lost nothing. Now, if you have an account with no fees and no risk, here's what 10,000 compared to put it in the S&P, doing a Dave Ramsey schlop, invest in and buy a term, invest the rest garbage. You put 10 grand in and you put it in the S&P 500. Basically, you'd be at 36,000 versus close to 61,000, over 1.5 times more growth with the index. You see, the awesome thing about this account that's available today, by the way, yes, it is correlated with the QQQ, but it also goes into cash. It also goes into treasuries. So when it's doing bad, it will get out of Dodge just like a double dutcher and jump rope. It'll knows when to get in, knows when to get out. And some say, oh, well, you can't market time the market. Yeah, but here's the thing. You know when to go to the sidelines. We might miss some of the upsides because I guarantee you, if you put the money in a QQQ, it would be almost double this money. But most of you don't have the ability. We're talking about retirement. We don't have the ability to avoid the crashes. We don't have the ability to have the time to recuperate. If you lost money in 2008, it took you 5-6 years. If you lost money in 2001, if this chart went all the way back to 2001, you didn't have the ability to get your break-even money back till 7 years later if you had it in the S&P. So here's the beautiful part is that you don't go down with the market. You have your nest egg. You have your retirement. You have the ability to protect your principal. And that's what this is all about. It's not about the complete growth of it. That's one thing. But not losing your money is how you have a successful retirement. Even Warren Buffett said he had 2 rules: never lose money. And number 2 is repeat number 1, never lose money. And this is an account that you never lose money. You're backed by the strength of an insurance carrier that doesn't get involved in auction rate securities or commercial real estate, that doesn't get involved with the manipulations of the stock market, that has cash reserves, that is outside of the securities laws. You get insurance on your money. If there's a financial reset, guess what happens, guys? And you got to use your gold and silver. You now have a contract that says my money is protected, guaranteed, and insured. You have to replace it with equal or greater value. So what that means is whatever's in circulation, I don't care if it's the Donald Trump coin or the meme coin or Bitcoin or the US dollar T or US dollar digital, whatever it is, they have to replace it with equal or greater value. Now, this is not meant for all your money, just the money that you do not want to lose. The money that you are okay with only having access to 10% a year, that you are okay with allowing to get an annual statement to let it grow long term. Maybe you were in your 40s like how I was, and you put 100 grand away. And in 20 years, it should be over $4.2 million if you manage it right. If you utilize the strategies that we teach our clients and we utilize our clients, the 1 and 2 year spreads and That is a completely effective strategy so that you can be on this green line. This blue line is where all of America's at. Typically, their 401ks or IRAs. They're just following the S&P 500. You don't know where your money is at. You're funding everything that you probably go against with, rather than protecting your money on the principal protection side and being okay with missing some of the upswings of the market. We're okay with that because, yeah, you're right. You can't market time it, but you sure as heck can avoid the downside max drawdowns. So there is no max drawdown. In the index there is, but not on you, because you get a standard deviation of 0 because it's not a security. This is just the engine that grows your account. This is just the engine that allows you to grow and compound and have that Albert Einstein effect of compounding interest annually. Of course, past performance is not indicative of future results. We totally get that ad nauseum. I've said that day in and day out. But you can pretty much predict based on past behavior on what you can expect. And what I tell clients is that having an account like this is so effective for your retirement, because as we go into, oh my goodness, as we go into this UBI track, trace, control agenda, where everybody and their mom's buying precious metals because we're not going to have the dollar's going to crash and you're going to use your precious metals, but boom, okay, all right, you're right, you win. So what if that's the truth? How are you going to go to Publix and buy a Publix sandwich, eggs, and a biscuit, or whatever that you want to eat? You bite it off and say, "Hey, here, I want to buy some bread and milk and eggs." Doesn't work that way. Oh, well, maybe you just have it in an IRA and it's meant for retirement. Great. Try liquidating your IRA, your precious metals in your IRA every single month to pay your bills. Let me know how that works. Because there's something called an account value, spot price, and a melt value. All of them, all three have different values. Did your broker tell you that? You have your account value, you have the spot price, which don't know if your spot price is your account value. That's another deal, because a lot of people bought thinking that you're getting spot price at $50 and they actually bought it at $75. That's called a seller's markup. And what's worse is they have a markup on the sell side. When you go to liquidate it, there is a markup typically, because they'll never see you again once you sell that money. They know it. So they're going to get their 20, 30, 40, even 50% markup. It's sad because some people are crazy enough to put all their money in an IRA, in an account that you don't even own, by the way. The government does. You don't know how long the money is going to last you. I have clients that come up to me and they had $700,000 in their gold IRA. And by the time their melt value came into fruition, months later, by the way, their account value was $350,000. They lost money on the red money side. They lost their seller commissions. They lost their broker commissions, and they got their melt value. And guess what? There's nothing they can do about it. Even if that's you, we have a home. We have a home for you. We can put your money in a green money basket, a green money account. We can even get a bonus if you like bonuses. Typically with bonuses, they're anywhere from 15 to 20%, depending on your state. And you grow with the index I'm just showing you. But the bad news is that typically they have a fee. Some of them don't, but they will take a good half of the growth moving forward. So I really don't care for bonus products. I would rather you have 100% of growth of the QQQ growth index or the NASDAQ or the S&P, a growth account, and having 100% of that and having that compounding year by year by year by year. And you will recuperate those nasty predatory losses that you suffered, not knowing what you're going into. Because these people that sell these terrible, terrible services, they don't have a pulse. They got to look at the eyes of our Savior and justify why they did what they did. And I don't think God will have any tolerance for that. So I'm saying all this is because if you have a precious metals IRA, now's the time to reconsider your plan. Because the IRA you don't own, guys, and now you're in a red money investment. And so the huge difference between red money and green money is that red money, like I said, has unlimited losses, unlimited gains. You don't have any ability to control your asset because it's based by the prices of the supply and demand or the market makers. We understand who owns the trading floors. We understand who controls the price of the paper, of the silver and gold. Speaking of which, let's go ahead and take a look at it. Let's not just talk about it. Classic scriptures of Wall Street. We speak the truth here because sometimes the truth you can't handle. If you haven't heard about Green Money Solutions, let me tell you, a lot of retirees, they stick their money in their 401ks, they stick their money in their IRAs and their Roths, and they rely on stocks and bonds, even precious metals to grow their retirement, to get them to their retirement destinations. You need principal protection. You need an account that has ability to protect your money, grow with the index that you're currently already following with 100% risk. Now you have a principal protected account that will grow with equity-like returns, and more importantly, withdraw those funds while your account accumulates. If that is something that you're interested in, Green Money Solutions is a national brand that will protect your retirement. Over the past 22 years, our clients have successfully implemented this strategy to create a secure and safe retirement. Most advisors don't have access to this because they don't get paid to offer green money. All you have to do is go to greenmoneysolutions.com, fill out the information, and let's just have a conversation. Here is the US dollar, by the way. It shot up. Futures on a dollar, 261 all the way, to 282. It's coming back down a little bit. But the overall trend that it is going back up because it hit this bottom. This is on a daily. So that is a clean chart of the US dollar. Let's look at silver. So we're at 55 right now on silver. Look at this. It is just boom, boom, melting. This is just nasty. Look at all this volume. It is just melting nasty. So I think silver could hit a new low around 45. The next stop would be around, if I'm naked eyeing this, so there's a 45, 45.98, and another one at 36. So we could, if it blows through 45, the next stop could be around $36.48 from a technical standpoint. And this is on a day chart. I could be wrong, but that's where the next resistance is at, the zone, I would call it. Let's check some other charts. So we see silver on a pattern here that is just dead. It's dead because they keep on lowering the dollar. Raising the dollar. So as the dollar goes up, your silver prices will stay stagnant or even suppressed. And if that's you, if you have a big position in silver, it might be time to just reallocate because it could take a long time for it to come back up. And I don't know if you have all your money in it. I hope you don't. Maybe it's smart. 10, 15% is what typically is healthy. I don't want to say I recommend 10, 15%, but this is something that is red money that you're okay with losing. Whatever that is, it can be red money. So with that being said, guys, it's time to get your ducks in order. Let's have a conversation on what red money is versus yellow money and green money. I actually have a chart. I have a chart that you can download. Just go to greenmoneysolutions.com. And you can fill it out, how much I have in yellow, how much I have in green, or how much I have in red. I'll give you some homework assignment. Once you download that chart from Green Money Solutions, the guide, you can email it to me and we can schedule a conversation. You can email it at info@cortezwm.com. Again, info@cortezwm.com. Just download the guide, fill out how much money you have in yellow, red, and green. Again, yellow is going to be smart money, tactical managed money, money that's in the market, but it's professionally traded. Green money is going to be an account that you never lose anything. You have a contract that says my principal is protected. And in red money, how much you have. This would be your stocks, your bonds, money that you cannot really control the price of. Mainly on the downside, you have no control. And this is going to be your ETFs, your stock, your straight owned stocks, your precious metals, any bonds, 401ks, IRAs, typically anything outside of fixed is in red, even real estate. So if you want, you can download that guide on greenmoneysolutions.com. We are also revamping greenmoneysolutions.com. We'll put in new videos. We'll put the guide up. and you can book appointments, request information. Someone from my team will reach out and have a conversation. Typically, it's only 10, 15 minutes on our end. It could be longer if you have other questions. Let's just make sure that you're suitable for green money. Again, what you need to know about green money is that it is an insurance contract. It's not a security. It's not an investment. However, you have the ability to have a guarantee on your funds backed by an insurance company, and you have the ability to take 10% out in the first year. Typically, what this means is we can double your money within 4 to 6 years utilizing a growth index of some sort, depending on your state, depending on the suitability, liquidity rules, those things of that nature. So just give us a call, 813-448-3446, or visit us at greenmoneysolutions.com. And if you want more information about my firm, you can go to cortezwm.com and book an appointment there as well. With that being said, guys, I love y'all. And don't forget to get your awesome peptides from getmeleanusa.com. They're a proud affiliate sponsor of this show. I do make a few bucks if you decide to purchase something. Nothing serious, but you can go on an auto subscription, get 10% off, and you can cancel anytime. Some of the best peptides I've ever had. Get you leaner, think smarter, focus, as well as sleep well. My kids love it. I love it. The wife loves it. And guess what? It gets the little belly a little smaller. So I like that too. And I don't know if you like me, but man, I had this like huge addiction of cereal in the middle of the night. Like, I would just wake up like, I just need a bowl of like Fruity Pebbles or Frosted Flakes or something, the bad stuff. I would eat that like for years. And this stuff has helped me walk away from that, the food noise. So awesome stuff on the peptide side, animal peptides, as well as natural plant-based peptides. You can go to getmeleanusa.com, get you a performance pack. They got a special right now, and I'm really excited. So also, if you have any questions, email me at info@cortezwm.com or give us a call, 813-448-3446. God bless you guys. I'm out of here. So how many times have we gotten lost in the minutia of the everyday life? We've gotten fat, we've gotten lazy, we've gotten complacent, not just in our faith, but also our fitness, maybe our finances, maybe our marriage, maybe our family. But we've gotten complacent, and we constantly need to continue to grow. And one of the things I was weak at was in my fitness. As a former athlete, I thought I had it all. My ego got in the way. I'm like, I'll do it later. I'll do it later. Up until now, I have been able to focus on my fitness. For those of you who've been following me for 3 or 4 years, you understand that I've gained a lot of weight. I've used the excuse of having 4 kids, a marriage, a business, helping out at church, all these excuses. And I keep putting myself in the back burner. This is deadly. And what I love about this company, what I love about taking ownership, is that GetMeLeanUSA.com has the ability to introduce natural, groundbreaking peptides. What your body demands, what your body needs to release those fat stored cells, to build muscle, to gain your physical being back to where it's naturally supposed to be. We're not talking about big pharma saying we're going to come out with the weight loss drug. We're not talking about losing muscle. We're talking about gaining muscle, gaining your physique back, controlling your appetite, giving you the edge that you need to help you get your body back in check the way God intended it to be, by using his resources with America First products, with America First company that aligns and believes in what you believe in. Introducing GetMeLeanUSA.com. Get in. This is going to be groundbreaking, huge business opportunity, as well as a huge groundbreaking technology that is going to change the landscape. So I know good things before I see it, and I highly recommend you get in. All you got to do is click the link below and get you some fit, get you some lean, and get fit and get lean. This is not going to do everything. Of course, diet and exercise, you continue your walking, continue your protein intake, but man, does it make it a whole lot easier to get in shape. Look at me, I've lost 60 pounds, but this is actually fundamentally a great recipe to get back in shape. And I can personally attest to the amazing effects of this product. So go to getmeleanusa.com. You won't regret it. You can cancel anytime. They're affordable and yet they're effective. And you are supporting our show. You're supporting yourself. You're supporting a mission. There is an affiliate program attached to it if you would want to share it with your friends and family. There's a whole nother opportunity there. But more importantly, let's get your fitness back in check. God bless you. Carlos Cortez here, signing out.